Here's a detailed summary of Zillow Group's Q3 2025 earnings call, presented for easy listening. Introduction. Welcome to Zillow Group's third quarter 2025 financial results call. Today, we'll discuss our strong performance, driven by continued momentum in both our for sale and rentals businesses, despite a challenging housing market. CEO's key takeaways. Jeremy Waxman exceptional quarter. Zillow delivered another excellent quarter, exceeding our outlook with strong revenue growth, expanded EBITDA margins, and positive GAAP net income. This demonstrates the strength of our execution and the durability of our strategy, even as the housing market bounces along the bottom. Consumer first, product-led. Our success stems from a relentless focus on consumers and product innovation, aiming to simplify the process of buying, selling, or renting a home. For real estate professionals, we provide tools to grow their businesses. Integrated transaction strategy. We are leading the industry by offering a seamless digital, end-to-end experience that connects consumers and real estate professionals. Innovations like AI-powered virtual staging in Zillow Showcase and the Zillow app within ChatGPT are examples of our rapid product development. AI opportunity. We see AI as a critical differentiator. Our early integration with OpenAI within ChatGPT, offering the Zillow app, is a testament to our technological prowess and our long-standing use of AI. We believe user experience, audience quality, unique insights, and integrated transaction services will define success in the AI era. For sale momentum. Our for sale revenue grew 10% year-over-year, outpacing the broader market. We're moving beyond home search to become a diversified transaction-focused platform, integrating crucial steps of the housing journey. Zillow Showcase is gaining significant adoption, and features like buyability and enhanced messaging are simplifying financing and improving buyer-agent connections. Rental growth acceleration. Rentals revenue surged 41% year-over-year, with multifamily revenue growing 62%. Our strategy of building a comprehensive marketplace and modernizing the transaction experience is resonating strongly. We're seeing high partner satisfaction and are confident in our path to over $1 billion in annual rental revenue. Future outlook. We are on track for our full year 2025 goals of mid-teens revenue growth, expanding EBITDA margins, and GAAP profitability. We see sustained, profitable growth ahead, with opportunities to unlock incremental revenue in both for sale and rentals, regardless of market conditions. CFO's key financial metrics and outlook. Jeremy Hoffman Q3 financial highlights. Total revenue, $676 million, up 16% year-over-year, exceeding our outlook. EBITDA, $165 million, above our outlook range. EBITDA margin, 24%, expanding over 200 basis points year-over-year. GAAP net income, $10 million. Free cash flow, $295 million generated in the first 9 months of 2025, a 28% increase year-over-year. Segment performance. For sale revenue, $488 million, up 10% year-over-year. This significantly outperformed the residential real estate industry growth and was well above mortgage origination volume growth. Residential revenue, $435 million, up 7% year-over-year, with accelerating growth from Q2 to Q3. Mortgages revenue, $53 million, up 36% year-over-year, driven by a 57% increase in purchase loan origination volume. Rentals revenue, $174 million, up 41% year-over-year, now representing 26% of total company revenue. Multifamily revenue, up 62% year-over-year, with a 47% increase in multifamily properties on our platforms, reaching 69,000. Cost management. Total fixed costs grew only 5% year-over-year, demonstrating strong leverage against our 16% revenue growth. Balance sheet ended Q3 with $1.4 billion in cash and investments. Q4 2025 outlook. Total revenue $645 million to $655 million, 16% to 18% year-over-year growth. For sale revenue growth, high single digits year-over-year. Mortgages revenue growth, approximately 20%, with purchase origination volume growth over 40%. Rentals revenue growth, accelerating to over 45% year-over-year. EBITDA, $145 million to $155 million, 23% margin at midpoint. Full year 2025 expectations, mid-teens revenue growth, expanded EBITDA margins, positive GAAP net income. Future outlook, 2026 and beyond expect similar growth and EBITDA margin expansion in 2026 as in 2024 to 2025. Projecting continued market conditions similar to the current. Bouncing along the bottom. For 2026, mid-cycle targets remain $5 billion in revenue and 45% EBITDA margins in a normalized housing market. Zillow Pro will be beta tested in H1 2026, with a nationwide rollout in H2 2026, expecting modest incremental revenue in 2026. Key highlights: strong revenue growth, double-digit growth across total revenue and significant acceleration in rentals. Outperformance: Zillow consistently outperforms the broader housing and mortgage markets. Product innovation: significant advancements in AI-powered features, the Zillow app and ChatGPT, Zillow Showcase, and integrated transaction tools. Rental strength: multifamily segment is a key growth driver, with strong adoption and partner satisfaction. Financial discipline: effective cost management leading to EBITDA margin expansion and positive net income. Strategic execution: successful rollout of enhanced markets and growth of Zillow Home Loans. AI integration: proactive and early adoption of AI technologies to enhance user experience and business operations. Lowlights/challenges: challenging housing market. The broader housing market continues to experience slower activity, referred to as bouncing along the bottom. Macroeconomic uncertainty: continued macro uncertainty is factored into future guidance. Regulatory scrutiny, mentioned in Q&A while not a direct lowlight of the quarter's results. The FTC lawsuit regarding syndication agreements was discussed, with Zillow expressing confidence in its pro-consumer and pro-competitive stance. Most important statements from management. CEO Jeremy Waxman: Zillow continues to outperform both our outlook and the broader industry, showing the strength of our execution and the durability of our strategy. We are delivering the seamless digital end-to-end experience that consumers and increasingly the real estate industry expect and depend on. We strongly believe that the critical differentiators between those that succeed and those that get left behind in our category will be user experience, quality of audience, unique insights, and providing integrated transaction services instead of just top-of-funnel lead generation. CFO Jeremy Hoffman: our better-than-expected revenue performance, combined with effective cost management, delivered EBITDA of $165 million, also above the high end of our outlook range. The results of our cost discipline continue to be evident as we expanded our EBITDA margins by more than 200 basis points year-over-year. We are on track to deliver expanded EBITDA margins and positive net income for the full year 2025. Conclusion: Zillow Group demonstrated exceptional performance in Q3 2025, exceeding expectations through strong revenue growth, margin expansion, and strategic product innovation. With a clear focus on the consumer and an integrated transaction strategy, Zillow is well-positioned for sustained growth and profitability, adapting effectively to market dynamics and embracing the opportunities presented by AI. The company is confident in its ability to achieve its full-year goals and deliver long-term value to shareholders.